but if you want to try recording at your end, then please do.
Okay.
It would be a rather long recording, wouldn't it? I'll try. Please request
record permission from the meeting host.
Right, I'm recording it now, Clancy, so if you need recording, I'll make that available to you.
Okay.
I'll make it just gone 9:30. I say we are expecting others to join, but I don't want to keep you on hanging on for too long, so we'll get started. As you both know, I'm Bob Stebbings. I'm the director and founder of Bespoke Accounting. I'm also the author of the book 7 Reasons Why Businesses Fail and How to Avoid Them. And today we're looking at the 13 steps to setting up your real-time accounting system and providing you with management information. Now, we're a small group, so it's a very informal. So there's no slides, no presentation. We'll just be talking about it. And as there's just the two of you on at the moment, I'll leave the mics unmuted. So if you want to ask any questions, please do. I'll refer to my notes as we go along as well. So, I'd say quite informal. It is being recorded. So if you want a copy available, then I'll let you have that. Now, the thing that's driving the move more and more to digital accounting, if not for commercial reasons, is in the UK, we have HMRC's Making Tax Digital, which will kick in next April 2018. We have a little booklet available on Making Tax Digital, and if you want a copy of that, we can email you a PDF of that if you let me know you want that. So that's the kind of driving force behind the need to go digital. So looking at a 13-step system to making sure that you get this done properly and end up not just with a system that's compliant for HMRC, but for a tool that will help you in your business by producing the management reports and information that you need. The first important thing is assuming that you're not already on the cloud or have not got a cloud system of some sort. You need to make sure that your present system, your existing system is reconciled and fully up to date. You don't want to be transferring a system to the cloud that is going to cause you a lot of problems, time and money getting it right in the cloud version. You're far better to get all your reconciliations sorted out on the existing system before you attempt to make that transfer. The next step is to choose your system. I know that Richard and I had a short conversation about this yesterday. There's lots of systems out there. We particularly like Xero and QBO, QuickBooks Online, but there are others, ClearBooks, FreshBooks, Sage 1. Whichever system you use, there are a great number of advantages in cloud accounting. First of all, it's an automated system, so the bank feeds come in, which gives you 24/7 access to that financial data. They're much easier for invoicing, for your sales invoices, emailing out invoices, and again, because you're invoicing and dealing with that in real time, it's updating the system as you send out the invoice. That data is again being collected on a live basis. There's also lots of different ways of ensuring you get paid built into most cloud accounting systems. Whether that's using facilities such as Stripe and credit card payments, direct debits, and other payment systems that help feed in to the cloud accounting system to keep your debtors up to date and make you aware of who hasn't paid you. And also you can build in all sorts of reminder systems, and there's third-party software that will chase the debtors for you as well. So hopefully you'll get a quicker collection of the money with these systems. You get a financial dashboard, which is a very useful feature, and most software will have a dashboard that you can customize. So not just on looking at your bank balances and the outstanding invoices, you can monitor whichever aspect of your overheads or your data that you want to on a dashboard, so you can see that, you know, as soon as you open up your system. And all of this really is building up live data that will give you instant reporting, whether it's just a simple aged receivables or aged payables report. It is available, you know, at the push of a button. They're all secure, you know, all the systems are backed up. They're as secure as the online banking systems. So you haven't got to worry about your systems going down in-house. As long as you've got access from any computer or laptop to the internet, you can access your accounting information. And they're maintenance free because, you know, they're on someone else's server in the cloud. You're not having to look after them. And they're always updated. Always got the latest version of the software. And once you've got the system set up properly, they should reduce your overall accountancy fees, because the end of the year accounts will be that much easier to produce. So, as I say, step 2 is choose that system, whichever it may be. But having chosen your system, the third thing is to make sure you set it up correctly. There's all sorts of things that you need to get in there in terms of your own business, your own organisation data, so that when you produce sales invoices, you've got all the VAT registration numbers and all the information that a sales invoice should have, and you bring in all the standing data that you need to bring in terms of debtors, customers, suppliers, and so forth. Then there's a chart of accounts. If you're importing from another system, the desktop system like Sage, then chart of accounts can be imported and adapted. But each business and each industry sector will need to make sure that their chart of accounts is designed and set up in a way that provides the information that they need, you know, in terms of the management reports that you want to get out of here. So we're not talking about setting up codes and overhead titles that are relevant to HMRC or to Companies House. We're talking about those that are relevant to your business, so that when you do start looking at getting management reports out of it, or perhaps just monitoring some overheads on your dashboard, they're the ones that you want for your business and are going to provide meaningful information. Also in the chart of accounts, it's important to make sure you can get depending on the software, get the VAT settings correct, because some overhead, like postage in the UK won't be subject to VAT, whereas couriers will be. So you need to get those set up properly. Now, looking at your existing system of accounts, you'll want to import that final sort of trial balance from that system into the new system. So that's a good step to make sure that you get the correct history converted to your new cloud accounting software, with all the fixed assets, current assets and liabilities properly shown from that trial balance. When you move across, this is step 5, we're looking at making sure that you've not only got the opening trial balance right, but you've got the individual debtors and creditors, your customers and suppliers, you've got those balances in there correctly. And so that when you're coming to match payments and receipts afterwards, that's easily done, because cloud accounting systems such as Xero work on an automatic match with for a bank receipt coming in. It'll look for an invoice for that amount from that customer, and similarly to make a payment when that comes through on the bank feed, it's looking for a supplier's invoice to offset against. So it's important that you get those outstanding invoices from your old system brought correctly across into the new system. So they have to be entered as individual invoices really to get the correct figures there. Within most systems, so it's looking at step 7, the first thing you want to start doing is making sure you're invoicing your customers from day one. Within the software, there'll be different templates you can set up for your customers, all sorts of different styles and formats, depending on your type of industry, whether it's a service or a product, as to what type of item line you need to get into your invoices. All these can be set up within the software before you raise your first invoice. And you can, set defaults for customers in terms of VAT, rating, credit terms. Make it offer some customers 14 days, others 7, some 30. Normally, you guys set up a general default for credit terms, but you can override that by setting up individual credit terms for each customer. Then, just moving on to step 8, the most important part of the cloud accounting system in terms of the processing is the bank fee. You need to get the automatic bank feeds set up. Most software will have arrangements with major banks, make this an easy arrangement. Some banks charge a fee for this, but it's critical to the up-to-date processing in your system that these bank feeds are correctly set up. Some banks can be more problematic than others, but over the years they've generally speaking, those problems been ironed out. So step 8 is to set up that bank feed and ensure that that's coming in without any breaks, so that you can start matching those payments and receipts to the invoices and expenses and overheads on a daily basis. Step 9, often within businesses, there are some transactions that are repeated, and really the key to the end product of getting the management information out and the management reports that you need to run your business and ensuring that they're up to date. But the key part of that is automation. So where you have repeating transactions, it's a good idea to set those up within your cloud accounting system so that you haven't got to go through that process each month, whether it's a repeating bank payment or whether it's a repeating journal you need to put through. Once you've set them up and automated them, then that is done. Moving on, this is your first cloud accounting system. You've had another accounting system before. Then step 10, to ensure that you can get meaningful reports that are drawing on previous year's data to get comparisons, trends, and that sort of data out. You need to ensure that you do bring forward into your cloud accounting system the transaction history for, I'd say, sort of at least 2 years from your previous system. And I think we touched on it with customers, but step 11 is you transfer those supplier accounts across, and whether there were outstanding invoices or not, you want that data in your system so that you can easily access those accounts when you get another invoice from that supplier when you're doing business with them. Step 12, of course, was on the same thing with the customer records. We talked about bringing in the outstanding invoices, but again, you want to get some data on your customers there for future marketing and whatever else you may need to do, so to get trends out of the customer data those that haven't ordered from you for a period of time. If you bring all that data across from your previous system, then you'll have a much better and more robust system in your cloud accounting system for dealing with your customer base. Now, step 13 is the final step. Once you've got all those transactions in from your previous system, you've got everything filed and balanced, you've got the bank feed set up, you've got all the chart accounts and all those items that you need up and ready. There's then a whole load of apps, third-party software that you need to start exploring, as these can greatly help you in using them, getting the best out of your accounting system, and to get the best management reports you want to get out of there. Now, depending on the software that you choose, we may restrict the apps that are available to you, but in general, Xero and QBO are the market leaders on the software, and most third-party software providers will ensure that their apps integrate with those particular cloud accounting systems. So what sort of thing might you want to look for? I mean, there's obviously different applications depending on how you're selling. So if you're selling across different platforms like Amazon, eBay, and so forth, then there's software like Vico and others that will bring the data in across multiple sales platforms to help you monitor your stock levels. Because if you're selling on eBay and Amazon and your own website, and perhaps you have a retail outlet as well, then when you're dealing with those sales in real time, you need to have the systems that will ensure that the stock availability is there for those orders. Another area that you might want to look at is getting paid more quickly. So there's people like Chaser and other bits of software that will help you to set up your systems of reminders, help you design the email templates that go out to customers, and ensure that you're getting paid promptly. I know that Xero are doing some market research amongst their customer base, which will prove with the data they get from their customers that by using cloud accounting systems such as Xero, the average debtor day comes down. In other words, people on cloud accounting get paid more quickly than people who are not using cloud accounting. Obviously, Xero are doing that as part of their marketing and sales program because it's a good selling point. But obviously, for the user, it's putting money in the bank account. Then you're looking at there's reporting systems within most of the cloud accounting software, such as Xero. It'll give you the sort of reports that you need on a day-to-day basis in terms of who owes you money, who you owe money to, profit and loss, balance sheet, and so forth. And then there's a lot of other apps out there that'll help you manage that data to produce the sort of cash flow forecasts, the general modelling that you need to be able to budget and plan for the future of your business. Now, there's lots of software because not every business is the same. So you need to ensure that those apps are right for your particular business. There are also different requirements for different industries, such as the construction industry has to operate a CIS scheme. So most software, including Xero, will have some sort of facility for dealing with CIS, but then there's the software, third-party payroll software as well, that will integrate with these to ensure that that your payroll processing is being correctly hosted within the cloud accounting software. Again, all part of that automation, all part of ensuring that you have accurate live data, which is the key to the management reporting that every business needs. So what the goal is to say, okay, HMRC, Companies House, everyone else requires me to keep good records, to produce accurate records for VAT returns and everything else. But going beyond that requirement to comply, there's an overriding requirement to have the data you need to run your business. And this is what the cloud accounting systems will do for you. So, just to recap, there is a requirement that's going to affect every UK business and landlord coming into effect in April 2018, called Making Tax Digital, which is going to really make every business and landlord do some form of cloud accounting. So having been forced at some point to do it, it's best to adopt that now, earlier rather than later, and ensure that by following the 13-step process, you get the accurate you need to produce management reporting. So just to recap on those 13. Step one is ensure that whatever system of accounting you're using at the moment is properly reconciled. Debtors, creditors, VAT, PAYE, bank account is properly reconciled before you transfer it to your cloud accounting system. Step two is to choose the most appropriate cloud accounting system for your particular business. Step three is to get the system set up correctly. Step four, as part of that setup, you need to customize the chart of accounts to suit your particular business. Step five is to transfer the accurate trial balance across to the cloud accounting systems. Step six is to enter all the outstanding sales and purchase invoices onto a new system. Step seven is to create those sales invoice templates and emails that you need to ensure that you can start creating sales invoices and sending them to your customers from day one. Step eight is to set up the bank feeds, so you get daily feeds coming into the system automatically. Step nine is to set up all your repeating transactions, so you don't have to think about those again. Step 10 is to transfer all the comparative balances and history. Step 11, transfer your suppliers' records, whether they're outstanding invoices or not. And step 12 is to transfer all your customers' details, whether there's outstanding invoices or not. And then finally is to explore all the apps that are right for your particular business and will integrate with your cloud accounting to help you to run your business efficiently and produce those reports that you need. So that is today's webinar. As either you've got any questions on anything we've touched on this morning, and obviously it's in 30 minutes, we're not going into a lot of detail, but if you've got any questions you want to ask now, I'll be glad to answer them. But if you want to follow up with any sort of specific questions on something that relates to your business, then please feel free to email me. But for the moment, I'll gladly take any questions that either of you have.
Okay, Bob, Richard here. I was just interested in, you talked about setting up the sort of outstanding invoices for suppliers and customers and so on.
Yeah.
But also building in, let's say, a couple of years of transaction history. How do you marry those two things together?
I think it's going to depend on the systems. I mean, it's going to be a question of which particular software you choose and which software it's coming from, so how much data can be automatically transferred across. So it's generally speaking, that's going to be a computerized process to get that data across. There are people that like there's a company called Move My Books, which will use their own systems to bring that data across. But at the very least, you need the standing data in terms of customer name and address, even if it's not possible to bring forward past history.
Yes, and that's a challenge that I'm facing. Or I like, as you suggest, I like to have the transaction history so that you can make comparisons on a year-to-year basis and month-to-month basis, sort of thing. But that means that if you're importing the transaction history, you've got to do some jiggery-pokery, really, in order to get your customer balances right and your supplier balances right at the point that you go live, I think.
That may be so, as I say. I mean, a lot depends on the system it's coming from as well. But I mean, each transfer will have its challenges.
Yes.
And obviously, there are more challenges the more data you want to bring across. But it may be that you've got to have some sort of workaround to get it absolutely right. But certainly, with some of the third-party applications around to help you import those transactions, it should be possible. I'm not saying it will be possible, but it should be possible.
Yes. Okay. And you mentioned, the core reason for kind of pushing towards cloud accounting is about this digital tax. Does that mean, are they going to require that accounts are digital, or is it just the filing of tax returns?
Well, yeah, I mean, I'm assuming you've got UK businesses, but this is obviously in the UK.
Yeah. Yeah.
Yeah. Basically, the way that information is submitted to HMRC is going to be totally digital. That is on a quarterly basis. Starting April 2018, businesses and landlords with turnover over the VAT threshold from April 2018 will have to submit quarterly details of their income and expenses digitally. So it's going to be uplifted to HMRC's computers. There will be quarterly returns and an overall annual return, but it is a requirement to have your accounting information in a digital format to upload to HMRC.
So any company that's a limited company that currently submits annual returns will now need to submit quarterly returns, will it?
So I'll after we finish, I'll email you a PDF of the booklet which shows you the timetable. But limited companies are the last ones to come across. So limited companies come across in April 2020. They're starting with the businesses and the landlords, which affects just individuals with rental property, where their income is over the VAT threshold. They're the first ones in April 2018. All other businesses will come across in April 2019, and finally limited companies in April 2020, at which point the personal tax returns will cease to exist. I think the last personal tax return is 2018-19. So every business, every individual will be submitting quarterly returns digitally to HMRC. And other information, say for personal tax returns, HMRC will be collecting from the banks and the building societies, and they intend to try and get dividends from PLCs for each individual, so that the third-party data they'll get digitally as well. but it's the things that the individual business and company and person has to submit, which they can't get from a third party, which is your own sales invoices, your own expenses. They can't get that from anywhere else other than the taxpayer. So they're making the taxpayer submit those digitally as well.
Yes. Oh, well, okay. I'll be glad to receive your PDF.
Yeah, I'll send that across to you because, as I say, I mean, originally it was going to be people with a turnover of £10,000 or more. So they chose to start with the smallest businesses, which would be least ready to put their accounts onto digital format, which seems a little bit crazy. They have now changed that to businesses with and landlords with income over the VAT threshold. Doesn't mean to say that they are registered for VAT, but they have a turnover at that level. Hopefully, if they are VAT registered, they will have some sort of accounting system in place already, so that the move to digital accounts shouldn't be that traumatic.
Okay.
But yeah, I'll send
Great. Well, thank you. Very, very useful sort of little summary that you've given there. Thank you very much.
Not at all. So, if there are any other questions, Clancy?
No, I'd just like to thank you and ask your permission if you send me a recording to send to show it to some people that I obviously refer to you anyway for any accountancy services. I deal with quite a lot of people who are not VAT registered and starting in the network marketing arena. One of the attractions of that is that basically you just get paid commission for what you do.
Right.
And you've been a very simple tax return, really. It's commission less expenses. But I can see the HRMC strategy in trying to make everybody accountable. It's part of the culture that we now exist in. So if you're happy for me to show the recording to my groups when I do it.
Yeah, indeed, I'll send you the PDF of the Making Tax Digital as well.
And I'm also looking at working with, I think you may have met him, Mike Wallace, who used to be the area leader for networking.
Oh, yes, indeed, yes.
Yeah, he's looking to build a Salesforce forecasting dashboard based on what he used to do as a senior process manager at IBM, which will be addressed at the higher end of the SME market. And I'll be promoting that with him, and that will also open the door for us, or myself, and Paul Gibson to talk to them about Angel Business Club, which I think you're familiar with.
Indeed. Yes, so
I need to probably have a zero type accountancy system myself when I move into that market this year.
Okay, Clancy, that's good.
So thank you very much. Your webinar was very informative. And I think a lot of people could just benefit from spending 30 minutes listening to you.
Thanks for that, Clancy.
Yes, I agree. Thank you very much.
Not at all. Well, hopefully we'll have a chance to meet again on the webinar, but I'll get those things across to you after this meeting as well. Thanks very much.
Are you holding these on a regular basis?
Yes, this is intended to be the first of a regular monthly webinar. Just sort of short webinars so that don't take too much time out of people's days.
Yes.
But hopefully on topics that they find relevant to their business.
Great. Thank you very much.
Thank you. Bye for now.
Have a good day. Bye-bye.
Bye.